In this lesson, we're going to be talking about multi-timeframe analysis. It's the introduction to multi-timeframe analysis. In the previous lessons, we already covered the basics and the fundamental kind of basics of trading, such as price action patterns, candlestick formation, support and resistance levels, indicators, and so on. This is now stepping it up to another level. It's literally building on that foundation knowledge that we already had in the previous lessons and taking it farther. Multi-timeframe analysis is, in my opinion, the most important part of trading, of actually analyzing the charts. So what it is in simple terminology, it's looking at one time frame, making sure that the next time frame is actually confirming what the higher time frame is showing, and continuing to go lower and lower and lower, from the monthly to the weekly to the daily to the 4 hour to the 1 hour and even to the 5 minute. So multi-timeframe analysis in a simple form is using multiple time frames to confirm one another. Okay, so we're going to show you a lot of different examples here, but one of the most important things that I want you to focus on in this lesson itself is one very important sentence, and that is a run on a higher time frame is a trend on a lower time frame. So that is really the simple basics of multi-timeframe analysis. A run on a higher time frame, we already know what a run is. It's just a simple run to the upside or a run to the downside, right? Is a trend on a lower time frame. So a run on a monthly would be a trend on a daily. A run on a daily would be a trend on a 1 hour, and so on and so on, right? So that is what we're going to be focusing on in this lesson right now. So let's have a look at the first example. And the first example that we have here is, I'm going to get you to focus on this monthly chart, and I'm just going to remove the support level for now, but check this out, right? So we have a very simple run over here, right, that started on this beautiful bounce of the monthly 50 EMA. We had this little double top, right? So we already know price action patterns. Here was a little inside bar doji, bearish high test, and then bearish engulfing, forming this double top, rejecting the daily 50 EMA, or in this case, the monthly 50 EMA. And then this bearish run occurred, okay? So this is a run on a higher time frame. And when we look at this time period on the daily chart as an example, that would be right here. If you look at the cursor, this is where that monthly 50 EMA rejection happened. That was where that double top on a monthly chart happened. And check it out. As we have this run on a monthly, right, we don't have any pullbacks or anything like that on a monthly time frame. It's just a simple bearish run. But on a daily chart, check it out. This is still a higher low because we have this massive run to the upside. Higher low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower highs, lower low, lower high, and so on, right, until it formed this little double bottom here. So this is a trend, right? It's a bearish trend forming lower lows and lower highs this entire time. It's a beautiful bearish trend. So a run on a higher time frame is a trend on a lower time frame, okay? And let me show you another example here. So if we look at this one as an example, it's the same thing. We have this monthly chart, run, rejection of the monthly 50 EMA. We're going to come back to these examples and talk about them in a little bit more detail later within this multi-timeframe analysis module. But right now, this monthly chart rejected this monthly 50 EMA with this bearish high test reversal and started this bearish run. But you can see on a daily chart, it has these small little pullbacks. So it's a trend on a lower time frame. Next example. Same thing here as an example. We rejected support on the monthly chart, right? What was once resistance became support. Check out this beautiful candlestick formation right here. You guys know already what it is. So in your mind, low test, another low test, little doji, run to the upside. This can be considered even a tweezer bottom. And then this candlestick, that's bullish engulfing. So again, we have what was once resistance became support, and this new bullish run started. And as this new bullish run started, check out the daily chart during this period in time. Higher high, so we were in this bearish trend. Let me bring you back. So we were in this bearish trend. So again, bounce of the monthly 50 EMA, check it out, fell to the downside on the monthly chart for 1, 2, 3, 4 months. And during those 4 months, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, as it hit this bottom, at that point the bullish engulfing started to develop on the monthly time frame. That is when we had the breakout, higher high, higher low, higher high, higher low, higher high, higher low, and it continued, right? And that is, again, a run on a higher time frame is a trend on a lower time frame. Now, another really interesting concept, we're going to wrap it up with this introduction. A run on a higher time frame is a trend on a lower time frame. But something that merges it all together is, if you remember, or if you just remember this point as well. So run on a higher time frame is a trend on a lower time frame, but a trend on a lower time frame, when it starts to develop via some kind of bullish price action pattern, such as a triangle or a double bottom or a head and shoulder pattern, whatever it is, whenever that trend starts to develop on a lower time frame, that is confirming that, hey, the higher time frame is probably starting a brand new run. So it can go in reverse as well. When you notice that a lower time frame is developing some kind of price action reversal pattern, right, and starting a breakout, then chances are the higher time frame is starting a brand new run or a brand new pullback. So that is it for this video for right now. We're going to continue talking about multi-time frame analysis in the next lessons and so on. But this is so far the basics of multi-time frame analysis. You got to understand that a run on a higher time frame is a trend on a lower time frame. But also, this is something that we'll dig into deeper as we go on. A trend reversal on a lower time frame, when it's developing, starts a run on a higher time frame, or a pullback on a higher time frame. That is it for now, guys, and I'll chat to you guys in the next lesson.